Hello and welcome to today's More Report. Charles Fraser's on Wednesday 15th of November with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting move that we're seeing on the markets at the moment. We've seen the dollar, which is starting to correct, and the correction is coming quite strongly now. There's been a shift in sentiment on the dollar, and that has come with, it's sort of been driven by, I think, concerns over how the US markets are going to react to tax reform, that's sort of coming through now because I think tax reform is struggling in the States, and that's certainly being reflected in the Treasury yields. 2-year Treasury yield coming back, but we're also seeing the 10-year sharply down, back from 2.4% yesterday. It's now down at 2.33%. So 7 basis points in just less than sort of 2 days on that Treasury yield. And we're seeing a massive decline actually on the trade weighted dollar, and that's come as the euro dollar has rallied quite strongly, almost 180 pips in just since yesterday morning. So that's had an big decline on the Treasury, on the US trade weighted dollar, and that is certainly impacting across these markets. Look at these sort of measures that I look at. The bond yield spread under the 10-year Treasury, the spread is tightening, and that tightening spread is positive for euro dollar. We're also seeing the Treasury yield lower, and subsequently dollar yen is also lower. So that is two key factors in Forex today. There's also been a safe haven shift on the back of equity markets coming under increasing pressure. The pressure that equity markets are coming under is on the back of reduction in expectations on the positive impacts of tax reform. Certainly that is starting to really impact on markets. But interestingly, sort of the States is not really seeing that quite yet. But at the moment, we're seeing a big reduction in or big decline on the DAX, for example, and the FTSE 100. So the Wall Street market's not yet really being hit by that, but it'll be interesting to see if that continues lower today. But as you can see here, DAX again under big pressure. 100 ticks off on the DAX. Also on the CAC and the FTSE, also both under pressure. So this is an interesting shift in sentiment. Also seeing gold supported back above 1280, looking towards 1290 again on gold. But the dollar yen below 1285. 1295, sorry, that is a big level near term that has been breached as well. I'll look through all these factors in the market analysis in a bit. But so some key moves we're seeing on their markets. Now we've got some data points out today, and I think US inflation takes the focus, but we've just had out UK unemployment and wage growth. Now unemployment stays in the UK at 4.3%. Now wages ex bonuses improved slightly to 2.2%, and that has sort of helped sterling higher a little bit, about 10 ticks, but it's sort of basically in line with expectations. And what we've seen is the market, I think, which is going to be focusing on today, the inflation data for the US. The US inflation data is expected at 1:30 to come out basically flat on the core, 1.7%. Headline expected to drop back to 2%, but the core data is the real number that's going to move the market, I think. Expected to be flat again at 1.7%, where it's been for the last few months. We've also got retail sales at 1:30 as well, expected at to be 0.2% on the ex-autos. We've also got Fed manufacturing, New York Fed manufacturing at 1:30 as well, 26. Which is again another strong number. EIA crude oil inventories. Now the oil price is under pressure today. EIA crude oil inventories. Are we going to see a continued inventory drawdown? We had a surprise inventory build last week, sort of bucking the trend a bit, but expected to sort of drop back and have a drawdown this week on the crude inventories. That could have an impact on the oil price this afternoon, or certainly should do. Now, my chart of the day is the Aussie dollar. Now, we've had Aussie dollar testing this key support 76.20 key near-term support. Sort of really giving that key support a go in the first couple of sessions this week, holding on to that into the close. But today, certainly, it seems as though that support has been broken. That's come on the back of weaker than expected Aussie wage growth, which sort of questions the RBA's expectation that wage growth could be sort of rising and continuing to improve. So that is broken down. 76.20 is a key support. So you'd say that's a bit of a range, really. So you'd measure 76.20 to 77.30. You could argue that's sort of about 110 pips of immediate downside break, and that would sort of come back towards, well, 75 figure really comes back into play. 75 figure is a long-term pivot on the Aussie. How far back does it go? Yeah, pretty much back to 2015, really. Consistently been a sort of long-term pivot level, and I think this breakdown certainly opens that. Now you've got the initial support 75.67. We've had a bit of a test of that today, and it bounced, but I think that overhead resistance comes back in at 76.20 now, and that's overhead supply of these old buyers that are going to be fairly stale now. So you've got the momentum indicators, RSI failing around 60 now, MACD lines crossing down below neutral. So yeah, rallies are going to be seen as a chance to sell on the Aussie, and we could get another opportunity today. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.